This is a step-by-step guide on how you can get started investing in the ASX, which is the Australian Securities Exchange. But before you even think about investing your money into the stock market, it's important that you have a clear goal and a vision about what you hope to achieve when you start your investing journey. Because that goal and that vision should only ever be to make money, obviously, because having no money sucks. But you also need to understand that if you do not do a sufficient amount of research on the companies that you invest your money into, then you may very well lose all your money. And rule number one is never lose money. Rule number two is don't forget rule number one. So let's get started. Now, the first thing you need to do when you get started in your investing journey, after you have a clear goal in mind and what you hope to achieve, is you need to open up a brokerage account. Now, a brokerage account is where you buy and sell your stocks from, and you can open up multiple different accounts on different brokerage platforms. The big four banks here in Australia offer a stockbroker service, and they charge you a fee every time you buy and sell a stock from your brokerage account. Each bank charges different fees, and they are all overpriced at around $20 every time you make a trade, and that increases to a percentage of the trade size for any trade that exceeds $10,000. Now, in my opinion, the only other alternative at the time of this video is South Wealth, which charges you $9.95 every trade that you make, no matter how big or small the trade size is. But hopefully some of the brokerage firms in America that literally charge zero trading fees will eventually come to the land down under. Now, I do still have brokerage accounts with both CommSec and ANZ Share Trading because I do my banking with both, and when you are first starting out, I think that it's better that you have that added security of trading on these bigger platforms until you have confidence in what you are doing. But of the three brokers that I personally use, which are CommSec, ANZ Share Trading and South Wealth, ANZ Share Trading is by far the worst, and I will cover the reasons why they suck so much in another video. But do your own research on what brokerage platform suits you, and it's a relatively easy process setting up an account. Each broker will set you up a trading account where you buy and sell your stocks from, and it's just like a bank account with its own BSB and account number. So once you are set up and you are ready to start trading, and you have diligently researched the company that you want to invest your money into because you believe in their business model, on the brokerage platform in the search bar, type in the company's ticker symbol, which is a unique series of letters or numbers assigned to that company that is used to identify its stock in the stock exchange. Click on that symbol and that will send you to the order page, giving you the option to either buy or sell. But first you need to set the limit on what price you are willing to pay and the amount of stock you hope to purchase. You then need to set the time limit on how long you want your order to be in the stock exchange for, which can be within the day, week or month. But some brokers allow your order to sit in the stock exchange until it hits your set price. You can then hit buy once everything is set. After you hit buy, the broker then sends your order into the stock exchange. And once your order is in the stock exchange, it doesn't necessarily mean that your order will be filled, because there is always a buyer and a seller. So if the price limit you set for your order was too low, your order will sit in the stock exchange until the time limit that you set is up, or the order will be filled once it hits your set price. So once your purchase has been confirmed, you will get a receipt for your purchase. And on some of the brokerage receipts, for example CommSec's, you will see the PID, which is the participant identification number by the broker. And the PID is unique to that broker. For example, South Wealth's PID is 1137, CommSec's is 1402, and ANZ Share Trading's is 2662. Next to the PID, you will see the HIN, which is the holder's identification number. This number links you to the shares that you purchase through your broker, and the HIN will be unique to your account with that broker. And if that broker goes bankrupt, all the shares that you own that are linked to that HIN can be transferred to another broker. Now, when it comes to what tools that are available to use before you invest in a company, I think that it's important that you learn how to read a company's financial statements, which they issue every quarter. And as a part of the diligent research that you did before you invested in the company, you should understand its business model and how they make money, and also how much of that money that they make is actually profit. Because as far as I'm concerned, a business is not a business unless it's turning a profit. So find out what their profit margins are, and if it's a newer a company that hasn't yet turned a profit, pay close attention to the sector that it trades in and be on the lookout for any other competition that might be on the rise and that can take its market share. Another thing I always look for is how much debt they have. I personally don't like seeing a company's financial statements that are over leveraged. Now this is just a quick overview on what I look for when I'm reading a financial statement, but if you would like me to make a full step-by-step video on how to properly analyze a company's financial statements, then let me know in the comment section below. And now that you know how to invest in stocks, the best time to get started is now. For more videos on all things investing, subscribe to this channel.